Have you ever found yourself wondering, can the IRS really access my QuickBooks data? It's a question that stirs anxiety in many business owners and individuals alike. With increasing reliance on digital accounting systems like QuickBooks, understanding the potential for IRS scrutiny is crucial. In this video, we will dive deep into the relationship between the IRS and your QuickBooks files, exploring when and how they might access your financial records. If you're interested in learning more, check out the links in the description for additional resources. To begin with, let's clarify one critical point. The IRS can request access to your QuickBooks files during an audit. This doesn't mean they have free rein over your financial data. Rather, they can ask for it under specific circumstances. Understanding these scenarios will help you navigate your responsibilities as a taxpayer. When can the IRS look at your QuickBooks? Discrepancies in tax returns. If there are significant inconsistencies between your tax return and information the IRS has from other sources, this can trigger an audit. The IRS will scrutinize your QuickBooks records to verify reported income, deductions, and credits. Random audits. The IRS conducts random audits to ensure overall tax compliance. Being selected for such an audit does not imply wrongdoing. However, during these audits, the IRS may review your QuickBooks files to gain insights into your financial activities. Suspicion of tax fraud or evasion. If the IRS suspects fraudulent activity or tax evasion, they may initiate an audit. Your QuickBooks data can provide detailed insights into financial transactions that could help identify any suspicious activities. What happens during an audit? When you are selected for an audit and the IRS requests your QuickBooks data file, it's essential to know how to respond effectively. Here's what typically happens. The IRS will send you a notice detailing what documents they require. They may request a full copy of your QuickBooks file, which includes all transactions and financial records for the years under review. You should work closely with your CPA or tax professional to ensure that you provide only what is necessary and relevant to the audit. Preparing your QuickBooks for an audit. Preparation is key when it comes to handling an IRS audit involving your QuickBooks files. Here are some steps you can take. Number 1. Organize your records. Before submitting any information, ensure that your records are well organized. This includes reconciling all accounts, ensuring that all transactions are accurately recorded, running reports that summarize income and expenses for the relevant years. Number 2. Create a separate audit file. It's advisable to create a separate QuickBooks file specifically for the audit period. After closing out your books for the year, make a copy of your QuickBooks file. Rename it to reflect the tax year in question, e.g., ABC Company 2023.QBW. Provide this file to your CPA for review before sending it to the IRS. Number 3. Limit access. When providing access to your QuickBooks data, avoid giving out administrative passwords. Instead, create a user account with limited access specifically for the auditor. This ensures that sensitive information remains secure while still complying with their request. Common myths about IRS audits and QuickBooks. There are several myths surrounding IRS audits and how they relate to QuickBooks. Let's debunk a few. Myth number 1. Only large businesses need to worry about audits. Reality. Any taxpayer using QuickBooks can be audited by the IRS, regardless of business size. Small businesses are just as likely to face scrutiny as larger corporations. Myth number 2. The IRS can access your files without permission. Reality. The IRS cannot access your financial records without proper authorization or a valid reason during an audit. They must follow legal protocols when requesting information. Myth number 3. providing more information helps your case. Reality: you should only provide what is specifically requested by the IRS. Offering additional information can lead to more questions and complications during an audit. What information does the IRS look for? During an audit, the IRS will typically focus on several key areas within your QuickBooks files. Income verification. They will compare reported income against bank deposits and other financial records. Expense deductions. The IRS will scrutinize deductions claimed on your tax return to ensure they are legitimate and properly documented. Business expenses. They may look at business expenses claimed on Schedule C or other relevant forms to verify their accuracy. How to respond if you receive an audit notice. Receiving an audit notice can be intimidating, but knowing how to respond can alleviate some of that stress. Stay calm. Understand that audits are common and do not necessarily indicate wrongdoing. Consult your CPA. Engage with a tax professional who can guide you through the process and help prepare your documentation. Gather documentation. Collect all necessary documents requested in the notice, ensuring everything is accurate and complete. While it's natural to feel apprehensive about the potential for an IRS audit involving your QuickBooks files, understanding how this process works can empower you as a taxpayer. By being prepared and informed about what auditors look for and how to respond effectively, you can navigate this challenging situation with confidence. With that said, thanks for watching, and until next time.